Every year, I review my regularly occurring bills, ones that we think are normal, but actually reviewing them can save you over $10,000 a year. It's time for a financial reset. And the reason is because we sign up for these things with companies and then over time they slowly increase prices and we just go along with it. We think that it's normal instead of reviewing to see if we're actually still using it or to see if there's alternatives to save money. In this video, I'm going to go through what those are and make sure you stick around to the very end because I'm going to share one thing that if you do this, it'll have a six-figure impact on your financial future. So let's get into it. The first one is auto insurance. Insurance premiums almost always go up every year. They rarely stay the same. And you might have heard the saying
15 minutes could save you 15% or more.
It's a common phrase, slogan from certain auto insurance companies, and it's usually true. Reviewing your insurance could easily save you $100 a month, especially if you bundle in renter's insurance or homeowners insurance. I ended up switching insurance companies last year because my rates had gone up and I saved over $100 a month. But the sad thing is, unfortunately, my rates have gone up again, so I'll be shopping for another insurance company. And in fact, I'm really unhappy with my insurance company right now, so that's another reason to be switching. The next one is health insurance. You get a new job and then you sign up for health insurance, reviewing all the options, and you pick the one that you think is best. And the thing with health insurance is people usually overestimate how much coverage that they actually need. For example, if you're young and healthy, the chances that you need really extensive coverage is really low. And most people will generally overpay for that coverage. Now, again, review what you think, how much coverage you actually need, whether take into account like maybe family history or if you're more prone to getting into accidents. And don't just click the one that looks the best, but actually review which one is going to fit your needs most. Oftentimes, insurance, when it's provided by your employer, you can only change it once or twice a year. So the next time that review period comes up, make sure to take a look and see, do you have the best coverage? And maybe you realize you are overpaying, you don't need as much coverage as they're providing, and going down a tier or two could easily save you $125 a month or more. The next one is setting up a savings account for your tax refund. And the reason for that is oftentimes when you get a tax refund, it's either going to be in the form of a check or it's going to come to your checking account. And when that happens, you're more likely to spend it. But if it's going into a savings account, there's a higher chance that you'll save that money and you won't spend it. So that's the equivalent of saving $100 a month, assuming that the average US tax return is almost $2,000. And I'm still taking into account that you'll end up using some of that for personal expenses. But if you save half or a little bit over half, that's the equivalent of $100 a month. Okay, so far we've gone through 3 action items, and all of these action items can be done within the hour, and you're looking at almost $4,000 in savings over the course of a year already. And we've still got so many more to get through, so let's continue down our journey to saving $10,000. All right, the next one is utility bills, especially internet and cell phone. And this is an important one because these utility companies are notorious for bumping up rates after 1 year. And the reason for that is, let's say you switch to a new provider, let's say T-Mobile, or if you're in Canada like Rogers, they usually have a really good promotion for the first year. And then what they do is starting in your second year, they'll bump up rates by like 50% or more. For example, you could be paying $50 a month and then the year ends and now you're paying $100 a month. I've seen it happen to me. And so what I do is as soon as that first invoice is about to hit, I'll call them and be like, hey, my rates are going up. What can you do to bring it back down? And if they don't do that, I usually end up switching. So there's definitely lots of benefits, and this could easily save you $50 a month. After utility companies, we have banks, and so banks are generally the worst because the fees creep up on you, and it's like a little bit here and there that adds up. So for example, let's say you've got a bank account that you pay $5 a month for, but let's say in your spending, you use the ATM a lot, and you end up paying, let's say $5 every time you withdraw money from an ATM. You do it a few times a month. Now you've got $35 in ATM fees. But if you went to your bank and you, instead of having that $5 bank account, you've got an $8 account, which gives you unlimited ATM withdrawals, now you're saving almost $30 a month. The other one is credit cards. So make sure as credit card renewals are coming in, make sure that especially if you're paying an annual fee, make sure you're using that credit card. It's adding value to you. You're getting a benefit out of that card. One thing that I've done recently is if I've got a credit card that I'm not using as much that has an annual fee, I'll call them and see if they have a retention bonus. So I've actually gotten bonus points by doing that, which is a great way to just collect additional points. And then if you're carrying a balance on your credit card, that's interest that you're paying. So Another option would be to give the bank a call and be like, hey, I've got this balance on my credit card. Are you able to provide a interest rate reduction? And that can also save you a lot of money over the term of your loan or while you're carrying that balance. And all of these are very quick, especially when you're calling the bank. It can be done all within an hour. And this can save you $50 a month, if not more. All right, the next one is a 401k match. If you're working for an employer 9 to 5 or any sort of full-time job, they'll usually provide you a 401k and they'll match a certain percentage of your income towards that. Make sure you're at least putting in enough to get that company match. The reason for that is if you're not, you're basically leaving money on the table. So for example, if an employer will match you up to 2% of your contributions, I would put in up to that 2% because, so let's say you put in, your 2% ends up being $100 a paycheck. Your employer will match that. So now instead of $100 going into investments, you've got $200 going. So you're basically doubling your money just from that. So if a 401k is part of your investment strategy, make sure you're getting that company match. It'll supercharge your contributions and get you that much closer to retirement and financial freedom. All right, next we've got subscriptions. Now this one's harder because companies charge you and it's like small amounts that you might not see. You might get a charge like once a year or once every 6 months and you don't really notice it, and it's so easy to just like let it slide by. And this one's the hardest also because it requires the most due diligence. You've either got to be checking your invoices, your emails to see if you get any receipts. You've got to check your statements, credit card statements, to see if anything unusual pops up. And the worst part is sometimes these companies don't even tell you that they're about to charge you. I've had that happen a few times. But keep a lookout for charges that you think aren't right and then get them canceled. This could easily save you $25 a month, which adds up. I recently had, I think it was a VPN that I had signed up for that I don't use anymore. And they were about to renew my, auto renew my annual plan. And thankfully I caught it and I canceled it right away. Otherwise that would have been like a $100 charge. So keep a lookout for these things. They sneak up on you and you want to cancel them as soon as you can. All right, you've stuck around till this point. I really appreciate it. This next tip is the most important, and it's setting up automatic saving. Now this one's the most important, especially if you want to set yourself up for long-term financial success. Now the problem with automatic savings is a lot of people think that, oh, I'm only going to be saving a few dollars a day or a few dollars a month, and they think that it's not worth it. They think that, okay, once I'm in a better position where I can save thousands of dollars a month, that's when I'll start saving. But the key is you want to start as early as possible, even if it's just a small amount. For example, if you invested $200 a month over the next 30 years, those contributions are going to grow to over $250,000 in 30 years, which is huge. So if you're thinking of starting to invest, that is my goal for you, that you start investing $10 a day. That's $50 a week, about $100 every paycheck if you're getting paid bi-weekly, $200 a month, and that is going to set the foundation for your long-term success. And just start with $10 a day, and then that doesn't mean you need to stick to that. As your finances improve, you're able to increase your contributions, and maybe you get to $100 a week and then $150 a week and then even more. But the key is having that consistency and just starting. If there's only one thing that you take away from this video, it's that small amounts can compound to huge sums of money over the long term, but the key is consistency. Okay, so the next one is to maximize your benefits. And what I mean by that is checking to see if there's any money you haven't accounted for. So for example, at work, I get a $60 commuter benefit, which isn't really advertised or talked about, but just by asking questions, I was able to find out about it. Now, $60 a month adds up. It's almost $1,000 over the course of a year. Another one might be taking advantage of, let's say if you got the American Express Platinum card, making sure that you're taking full advantage of the entertainment credit that they give you. Maybe you've got a Netflix account and you're paying for it on a different credit card. But if you put it on your Platinum card, you get those benefits. Again, it's just taking into account what benefits you already have and making sure you're taking full advantage of them. Now, with these tips alone, you could easily save over $10,000 in the coming 12 months. And if you're looking for more ways to optimize your finances, then be sure to check out one of these videos next.